Good morning and welcome back to the AM Society, your morning podcast that is fear-free and fact-focused. I'm Anna and I'm here with my co-host Maggie, and we're going to bring you tough conversations, politically diverse guests, and a new standard, civility.
Good morning, everyone, and happy Friday. I know I sound really
Woo!
excited for Friday, but I mean, come on, it's Friday. So now, today's podcast is going to focus on something that has been in the news recently and has created some strange alliances between
Really
people
strange.
Ted Cruz and AOC on the same side, kind of sketchy, sus things happening right now. And of course, I'm referring to the stock market chaos. And with that, for you, we have a financial advisor and a retail investor to really break it down for you.
Yeah, and additionally, so we've actually spoken with an analyst from JP Morgan. And although the big banks and financial institutions haven't really been able to speak to this publicly, we do have a bit of an inside scoop from their perspective as well. So we'll be relaying their message that they sent us, since they really do have to stay anonymous.
Well, there you have it, folks. The stock exchange bells are ringing a ding. So let us begin.
Now, if AOC and Ted Cruz agree on something, it's probably time
Hell
to
has
add it to the
frozen over.
Constitution.
Hell has frozen over.
That's a joke, everybody. Okay.
Sign it away.
But for real, so what the heck happened in the stock market? So today we're going to have on some guests to give you the perspectives to help you understand the significance of what's going on. By the way, just in case you think it doesn't relate to you, so 55% of Americans have actually invested in the stock market, either through retirement or direct investment. So it does affect the majority of us.
So to look into the events of last week specifically, the Reddit army versus the big hedge fund giants. Well, in other words, it's kind of more hedge fund versus hedge fund at this point, if you really understand the background.
Yeah, we'll get into that later.
Yeah, Anna's going to get further into that, but to start out the podcast that way. And I mean, you love to see it. The little guy's putting a huge damper on the big guy's day. Like, we all love to see the underdog come back and slap the big guy in the face. Come on. So to get really into it, if you didn't know this already, or if the memes have said, you're too afraid to ask, well, here's what happened. Hedge fund managers are, as we know, extremely rich billionaires. And they basically borrow stocks from businesses that are kind of on their way out. And then they sell them. They wait and hope to buy them back at a lower price to make money off of the transaction. This is called, investing. That's the difference between day trading and investing. Investing, you wait. Day trading, you're looking at every minute. So this past week, hedge funds sold borrowed stocks such as GameStop, AMC, BlackBerry, Express, and Nokia, and I think there's another one, but I can't remember, at a certain price, assuming the price was going to go down before they bought it back again. Well, guess what? The little Reddit army politely interrupted and created an entire world of chaos.
You know what I'm wondering though is where's Blockbuster? Why didn't they do this for Blockbuster?
Right? I was thinking
Bring Blockbuster back.
I was like, I remember as a kid going to Blockbuster. That's the real one. Right? You should be bringing back.
Oh my gosh, I remember that so much. It was like the highlight. It was fantastic.
I'm just sad that
Friday,
Blockbuster
Saturday
wasn't included. Yeah, right. Having your parents go, hey, you want to go pick out a movie? And you're like, yes, we're going to Blockbuster.
Bring Blockbuster back.
That's a movement I can get behind in a heartbeat.
BBBB.
God. Well, so mass organization through social media and other online platforms is really ultimately what would happen. And it's a new type of chaos that the stock market honestly did not see coming. But I mean, I love it. But I guess they will have to adjust to it. I mean, they don't want that risk. They don't want to risk another bankruptcy.
Yeah.
Like, it's nobody wants bankruptcy.
No. So this whole process, I'm sure you've heard these terms, but this is called short selling. And this was actually invented in 1609 by a Dutch businessman named Isaac Lemaire. There's a fact for you. So short selling, it contributed so much to Wall Street crash of 1929 that Congress actually banned certain kinds of short selling soon after. And this remained in effect until 2007. So that's kind of like a historical background on it. It's been a highly debated subject for a long time. But so during the pandemic, basically what happened is a bunch of people got bored and decided to try day trading to make a quick buck.
And the specific time to when people got bored, and you know who you are because I'm in a group chat with half of you, is between March 16th and March 20th is when really prices started crashing. Because if you look at it, most of the stocks like Yum or Boeing or even Apple and many others, that's when their 52-week low hit. That's when everyone was like, oh my God, I have an actual game in this. Like I can actually put money into the stock market rather than paying for stocks that are like 200 above. People could pay for this at like $20 or even 100. Because I mean, Disney even came down to 78, I think was their low. So Reddit went in, as most of you know, and bought all of these stocks, the ones I listed prior, BlackBerry, GameStop, yada, yada, that the hedge funds had just sold and then decided to hold the line. And if you know that line, you have absolutely been watching all the memes.
Hold the
which
line.
Caused hold the line, which caused
they even created like they marketed apparel with like emojis on it with like the hand and the diamond sign for
there's
like
a diamond,
hold the
there's a
line.
rocket, we're going to the moon. It's a
so
whole
funny
movement right now, which is great. This caused the market to freak out as the hedge funds lost billions and billions of dollars to the public groups. And we will get more into those details a little bit later.
Yeah, because it's a little more complicated than kind of what you've been hearing online. And you know what's really interesting is that many of these purchases were not because of the usual reason, just wanting to make a quick buck, but rather it's just the little guy, the retail investors wanting to screw over the institutionalized financial experts, which actually it gets back to our first episode. People really hate institutions right now, or at least they don't trust them at all. And I think that's that's an important part of what's going on here.
Oh yeah, they don't trust him anymore.
No.
I mean, are we shocked? Because every door keeps opening. You're like, huh, that's a little sketchy. Thank you, Robin Hood, but we won't get into that just yet. So for today, we have a few guests. Our first guest is Courtney. Courtney is a financial planning associate in the Charlotte, North Carolina area. She joined the financial planning industry in 2016 and works to help meet the specific needs of each client. She strives to support her overall team as well as teach financial literacy in hopes of educating the next generation of investors. She graduated magna cum laude from
Woo!
Virginia Tech. Yeah, very proud of her. Where she earned a bachelor's degree in business, specifically majoring in finance. Good morning, Courtney. How are you this morning?
I'm good. How are you? Thanks for having me.
Yeah, of course. Thanks for coming on. So, okay, for our first question, from a financial advisor's perspective, how do you view the events of the past week pertaining to the stock market itself?
So last week was pretty wild, even for like the market itself.
I've been calling it chaos.
Yeah, it was all over social media. So it was almost hard to miss what was going on. And just to your question, I don't think I'm necessarily surprised. I mean, we're still in a pandemic and people are at home a lot more than they've ever been. And for a while, actually, like last year and still a little bit this year, there's just not as much going on. For a period of time, there was no live sports and things are just slower for people. And, at like gambling places like Vegas have been essentially shut down. So people are spending.
That's a good point. Yeah.
Especially the gamblers are kind of itching for something.
Yeah.
There's just nothing for people to do. And, more so even last year. But with people being stuck at home, like people are bored and they've got potentially like stimulus checks to spend money on. And, people like Dave Portnoy at Barstool has very vocally and very publicly come out and said, I'm investing in the market, and whether, his methodology is technical analysis or not, like that's what he's doing. And he has a big following of people. And when he comes on publicly and says like, everyone go invest in the market.
Especially with gamblers, because that's what Barstool is.
People have nothing else to do and they miss gambling. Like that's their new method of enjoying gambling and putting money in. And like another way in which I'm not totally surprised is a lot of online brokerage firms have moved to a free and zero trading costs platforms. So in times past, it cost money to buy and sell stocks on your, online brokerage platform. But the zero commission trades have really engaged people because it used to charge people, and that was an impediment and a hurdle for a lot of retail investors. So, for example, Robinhood was one of the first to move to a zero commission trade platform, and that attracted a lot of people. So I think between people being home, more time on their hands, gambling kind of shut down, the social media rise of investing in the market, plus this $0 trading cost platform has all sort of contributed to what happened last week, or at least in part. There was a lot of other things, but that was
no, that makes sense.
Were like already in place, and then what happened last week was totally ramped up because of those two things, I think.
Yeah.
I mean,
And then
a
whole army building on that. So, a lot of people, I think we were saying this morning, 55% of Americans are invested either through retirement or in direct investing into the stock market. So how do you see this impacting kind of future market volatility? Because that impacts, people's retirement, people's, portfolios. Also, how is this going to kind of factor into the future market stability?
Well, I think this, maybe not last week specifically, but this type of trading activity is going to be here for a long time, if not forever, because once you move a platform to $0 for a trading fee, you can't really go back without backlash. There's always going to be a race to the bottom for that. So I think, the volume of people trading hands in the market is here to stay. And I do think platforms will stay at a very, very low to no fee type of transaction cost. But I mean, last week was so good in some ways and so bad. Some people were like so positively affected that they learned that they want to be in the market more. And then some people learned that, this is not for me, or they got just so frustrated by what was happening that they were kind of turned off by the market itself. So there's going to be a huge dichotomy of people from especially last week going forward, where they either continue to trust the market, or they start thinking like, well, this is just not for me. The system's always against me. And I think that'll be really interesting. But
well, that's interesting too, because the people that benefited, they didn't benefit because of traditional market methods. They benefited because of short sells, which is not how it's supposed to work.
Day traders on crack.
Day traders for sure. And there are certainly a lot of people out there who day trade, and hedge funds are always going to be around for a while, and retail traders are always going to be in the market. But I think, the longer term investor, honestly, like some of our clients, they don't even look at that type of stuff. But then there's people in our age category who do, and it's just a different type of investing that some people are going to be getting more used to and some people aren't. But some of that short selling and covering positions last week made the overall market drop. Actually, like we were down pretty big a couple of days last week, while all the meme stocks were getting the attention and price action. Like those were skyrocketing. And the market, because of the fundamentals of big positions having to be covered, those are actually big pots of money that actually have money in other places too. And some people's portfolios went down because they had to sell out of some of their positions that weren't the GameStops and weren't the AMCs, but to affect overall retail investors. So it was, for someone like me and people like y'all, I'm sure it was fascinating to watch last week. And I guess it's still
absolutely fascinating.
Yeah, it's still sort of going on, but I think I would be surprised if the craziness of last week happens, a lot going forward. I do think there might be some changes and regulations that come into play, and that's a whole nother discussion. But I think it was all kind of awesome that people were looking at the market as much as they were. And, I really wouldn't want someone to lose their whole life savings because of last week, but you only learn about the markets when you're in it. Like you can't read, you can read as many books as you want about it, and you can talk to people about it, but until you put your own money in there and you have some skin in the game, that's how you're going to learn. And you might learn that it's not for you, or you might learn that you might need help, or you might learn that you really enjoy it and maybe you're going to start paying more attention to it. But I think an overall benefit last week was that people were talking about it. And in my job, that's kind of cool. There was definitely positives and negatives, but I thought that was interesting because people all over social media, Portnoy and Elon Musk and Mark Cuban were talking about it, and then everyone had an opinion on it. Like it was your aunt, your cousin, your random friend you've never heard from in like the last year. Like everyone was talking about it. So it was kind of it was kind of cool for me at least.
Oh yeah, no, I thought it was really cool too because like people that kind of brushed me off when I talked about the stock market because I'm kind of obsessed with the stock market. All of a sudden they're all like, "Whoa, this is happening." I'm like, "Yeah, well," I'm like, "Are you new here? Like, welcome." You should have seen it in March. It was way more entertaining for me, at least in March, because discovering stocks between the dates I said earlier in the podcast, like March 16th to the 20th, was like a gold mine if you were paying attention. Especially with like Disney down, Boeing down, Yum's down, everything was down. Beyond Meat's at like 200 now. It was at like 80 when I found it.
So one counterpoint I will say, Maggie, is like definitely, I mean, obviously you want to buy low and sell high, but it's so hard psychologically for someone to put in money when stocks are falling so drastically like they were in March. I mean, people like sound like you, like we know that when those prices go down so far that that's a good time to buy, but it's really hard for people who aren't experienced in this to like throw money into a stock that's just falling. Every single day we woke up in March, it was like down 10%, down 20%, down 5%. And it's a lot easier for people to look at something like GameStop where it's going up every single day, 10% today. It was up 100% today. It's so much easier for someone to be like, oh, and have FOMO on the way up than to have FOMO on the way down. So you're definitely right. I mean,
patience.
For sure. It's very hard. Like, human psychology is like, it's backwards, you know, and you have to think that like people got really caught up in an emotional way last week because they wanted to make money and they saw a lot of people around them making money. And March last year was also another type of craziness, but it's hard to convince people to put in money when everything was going to hell, basically.
Yeah. Well, Courtney, thank you so much for coming on. This was an awesome perspective and always love having you.
All right. Well, thanks for having me. This was so fun. I would love to talk more about this if we could, but we can save that for another episode, I think.
Oh yeah, absolutely. I'm sure it'll happen again. And like,
this story will be around for a while. I think you guys know that like Netflix is already on top of it and other big, you know, streaming services want the story of it. So I'm excited to see how that narrative plays out. In the coming.
Well, thanks so much.
Okay, well, thank y'all.
So next we have a retail trader, Jed Gonzalez. He is a follower of the Wall Street Bets subreddit. And Jed has a degree in computer engineering and has long been interested in the stock.
Good, I'm doing great.
Good, glad to hear. So we just kind of wanted to hear from you a little bit about your experience. So kind of like maybe tell us about how did you become aware of these trends and kind of just your general experience as this kind of trader.
So I'm assuming we are talking about GameStop and
AMC, like BlackBerry, Express,
BlackBerry,
all the above, all of them.
Nokia. So we knew that, you know, we knew, and in terms of when I say we, Reddit, Wall Street Bets, or I'll just call them retail investors because I like to put respect on them because for what they did. I think for the retail investors, I think, again, millennials were socially, you know, apt and we love social media. And for us, it's easy to just go on our phone and, you know, access information. And I think what they did to GameStop, and although I caught GameStop at 50, I knew it was squeezing. I knew what happened was when they doubled down on their short, you know, maybe this is something I should go into. And from there, you know, I was able to catch it at 50. And although I got out at 115, I went into a stock called AMC, or any of these big hedge funds will push, you know, they own media. And these are big money guys. They will push a narrative that they want a narrative to be. And it doesn't matter what it is because they own underlying, you know, the physical thing. And although they're short paper, they're long physical things, and that's what we have to understand. And yes, but silver did go up, and I've always been a commodity guy, so I did catch that boat, and I rode it pretty well.
That's good. And well, so one question here. So in the future, so who are you going to trust now for this kind of like mass organization? Are you going to stick with the same Wall Street butts? Like, how do you guys know? How does this work in the future?
Is such a beautiful question, because back then, not back then, and I don't want to speak for Wall Street Bets, but the idea is for big banks, if so Wall Street Bet was really to use for to sucker people in. What Wall Street Bet is for was before all this volatility, before all this stimulus, Wall Street Bet was to dump money to, was to dump shares to retailers. Because what happened is when you have big hedge funds and when you have big investment banks, they always in the know, right? They always know what's going to happen before it happens, right? There's in the stock market, they're ahead of the game. And so when they want to unload a certain share or stock or whatever, they'll go on Wall Street Bets and say, oh, this is the stock to buy, right? Because every investment firms know what's going on as well, and so they're going to look for someone to dump it to, and we're always on the short end of the stick. And so what they do is dump it on Wall Street Bets and tails, and then the stock crashes. But the big banks are out of it because they dumped it into retail investors, because we're the ones suckered in and buying all this stuff because it was pumped on Wall Street Bets. Originally, that's what Wall Street Bets was for. And then Wall Street Bets found out that, hey, what we can do is look for a stock that's heavily shorted, with a short float of, was it 130 something %, which is insane. That means, it was GME was shorted, by 71 million. There's only 50 million shares of GME. So that tells you that it's called naked shorting or naked buying the big banks. And so that's why the SI, or the short float, was over 100%. They were borrowing money, leveraging money to short GME. And then, all of a sudden, Wall Street Bets, we all come together. People started buying it up, buying calls, buying crazy calls. I mean, option calls that were dating, all the way to 3 months from now, 4 months from now, to a year
so
from
you
now.
guys think in the future it'll be like kind of the same thing, you'll just be tracking on the same kind of platforms and organization and stuff?
See, that is, to get back to that question, to me, I don't know. I don't think so, just because now we are all skeptical and we don't know what narrative is being pushed, just like they did with silver, right? We weren't, Wall Street Bets, there was just so many media, so many things just pushing the narrative that it was Wall Street
Are we
Bets.
shocked?
CNBC that morning even came up. Yeah, CNBC even came up with a thing where it said, oh, Reddit's were pushing now silver. What makes you think that really was Reddit?
Yeah,
I know, right?
No, right?
So
yeah.
Again,
Just trying to toss
Reddit
people
was
off.
great. Yeah. Again, Reddit is great because it's decentralized, meaning no one really owns it. But then again, I guess I would say is the big money always will win at this point. And so I love Reddit.
Losing.
You can Reddit is always good just for the memes. It's always great for.
I love it for the memes.
Yeah.
That's where white people humor gets their memes most of the time. Every time I see it on Reddit, I'm like, come on, guy. Like, I know where you're getting your memes from. So.
and I love Reddit, and it's not just, you can find some great information, and although you can make fun of me for getting my information on Reddit or whatever, some people do know what they're doing, and you just, again, it's media. You just got to be aware of who's posting it, and just kind of doing your own homework and making sure that you don't get suckered in. My professor always say, if you don't know anything, you get suckered in to other people's opinion, and you start taking their opinion for facts, which is which is true when you're not educated in something, and it sounds like someone is educated on Reddit.
Yeah, they're parroting. Just taking the idea, somebody else's idea for themselves.
That's very, very true, for sure. Well, Jed, we really appreciate you being on here with us, and thank you very much for your perspective and your insight, and we wish you the best. High stocks.
Yeah, thank you so much. Now we're going to discuss the perspective of the analyst from JP Morgan. This analyst has been working in Wall Street capital markets in both public and private equity investments, as well as within large multinational banks. We have to keep them anonymous, but they have a wealth of experience to bring to the issue.
No pun intended.
Lol.
Dun, 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 dun. So this analyst had a few points to make. First, this trend is not new. Retail investing, which is the everyday folks on Robinhood, has slowly but surely become a factor on the stock market landscape. Apps like Robinhood don't require an investor to meet a certain level of financial credibility prior to trading, even in high-risk markets, meaning that literally anyone can trade. And Robinhood provides advanced capital to traders as well.
So now one of the most fundamental things that the analyst noted was this. And guess what, folks? We're not going to be that shocked by this. What CNBC and others like to say is how it's Reddit versus the hedge funds. But guess what? It gets viewers. We know that. But really, what we've seen is it's more of hedge fund versus hedge fund. Those long GameStop and those short it. So basically, when the Reddit guys began to buy up the shorts, other hedge funders bet in support of AMC. And everybody else, which really drove up the prices, it's not as sexy as a story. I mean, welcome to the media, but it's what really happened.
Yeah. So like as the analyst notes, the Reddit guys, the retail investors, they're strong in their conviction, but they really don't have anywhere near the purchasing power nor the coordination to pull off an operation of this proportion. Because you guys have got to realize, like, the weight of the hedge funds, billions and billions and billions and billions and billions. Yeah.
Billions.
Like the Reddit army, they might have been the spark, but it seems like the real power came from the institutional investors on both sides, which is really interesting because the Reddit army thought that they were screwing over the big investors, which, I mean, they were the spark, but it definitely was not the proportion that is kind of circulating around in the media.
So our next question to the analyst was on government intervention. They said folks like Ted Cruz and AOC should aim to first understand what is occurring, then take a stance. The notion that Robinhood and other trading platforms colluded with the financial quote unquote elites to fleece retail traders is a neat narrative. But again, it's media. It's far from the truth.
Yeah. And they said that Robinhood specifically, so there was the big issue about them temporarily halting trade. So how the analyst explained this, so Robinhood temporarily halted trade on these incredibly volatile stocks, not because they particularly wanted to limit the stock trade itself, but because of the risk of default on the advanced capital they had provided to users. So basically, they advanced capital all these users who didn't actually have the financial credibility. Additionally, the problem with Robinhood, according to the analyst, is not the service that they provide, but the way that they do it that kind of lends itself to this advanced capital issue. The user interface makes it appear as if trading is a game, and we've seen the results of that with swaths of retail investors treating it as such. It's kind of like gambling on steroids.
And that's the perfect way to put it because it is gambling on steroids.
Yeah.
So another interesting point is that the analyst noted that short sellers are very important for sniffing out dubious and sometimes even fraudulent businesses that don't deserve investor capital. The analyst thinks it would be most risky if the government started intervening in this process, thus disrupting the balancing nature of market forces, which I find to be very interesting. It's like a giant game to everyone. It's like cat and mouse.
Yeah. And finally, okay, so the final quote from the analyst on kind of moving forward, how is this going to affect things? So they say those who didn't get out in time will be left to suffer the losses of a highly pumped up stock lacking fundamental support.
Yeah, it's a bottomless stock.
Yeah, there may very well be another run up in these meme stocks, or they may be on their last legs, but whatever happens is driven exclusively by animal spirits, not by rational financial analysis. The folks who refuse to sell and go down with the ship, they're going to be the ones with the worst losses. The lessons that will ensue are what will leave a lasting impact. And his final word is that a free market is the best educator.
So in other words, Blockbuster, as much as we would love for it to come back, it's probably not going to.
Oh, no.
A girl can dream. Girl can dream. Watch them make Netflix virtual, where you kind of like put your virtual mask on and you walk into a Netflix. Like, it's just gonna, welcome to the future, y'all. It's just.
We just need to kind of like get to know somebody at Wall Street Bets and like just put a bug in their ear. Like, hey, Blockbuster.
Get
Blockbuster back.
It's empty. It's gone. But it's hilarious, and I think it's the next one. Why not? All right, so that concludes our segment, our educational segment, and our news of the day, really. So kind of to move on from that, we're going to go segue into our good news of the day, which for me personally, it's Jimmy's mom's birthday, so happy birthday. Not gonna shout out, age, but happy
Jimmy's
birthday.
your boyfriend, by the way.
Oh yeah, I mean, I wasn't gonna mention that, but here we go. Jimmy, my boyfriend's mom.
Well, I mean, there's a lot of
birthday
Jimmys
today.
out there, so just clarify.
If you know me, then it's Jimmy I'm talking about. So yeah, that's my good news of the day.
Well, my good news of the day is more general. Some of the retail investors who made a large profit have actually been openly donating to charities. Shout out specifically to Hunter Khan, who is a 20-year-old Cornell student who made about $30,000 and is using part of that to buy Nintendo Switch games and consoles for a local children's hospital. Good stuff.
It's funny because he was kind of the head of that Reddit nonsense.
Yeah.
He was one of them at least, which
good to
I
see.
think is great because he's kind of sitting there going, "Oh my God, I actually did something."
I know, right?
Time to put my money somewhere.
Yeah.
Well, folks, so that concludes our good news of the day. I know, very short. You can still tell us on our Instagram account about your good news. Please submit them by, let's say, Wednesday. That would be wonderful.
Yeah.
So my final thoughts is that the market is a very interesting place, and I've come to know it very well. It's constant long-term, short-term gambling. Well, depending on if you are a day trader or in it for the long haul. But either way, it's a very dark hole. It can flip on you at any moment. Trust me. Delta screwed me in the beginning, and I will never forget it. But I know that a lot of other stocks have screwed people too. So I mean, it's a game. It's a risk game. And if you know the game of risk, everyone gets mad by the end of it because somebody always loses. If you plan on jumping into the stock market solely because of FOMO, though, please do not, because you aren't in it for the right reasons. You might lose a lot of money because you don't understand, and you'll really mess it up for the rest of us who are actually in it to, invest. At least pick up a book first or start a group chat with your friends who are already involved with them. That's how a lot of my friends learned, because they jumped into a group chat with me and a couple of my other friends who knew what they were doing. Well, kind of, because you don't really know what you're doing with the stock market, period. So don't be that kid who has Christmas money with FOMO. Nobody likes them. As for the hedge funds, you better adapt fast because we're coming for you. Thank you very much.
Oh my gosh. Well, I don't have much to add to that, except when Netflix comes out with the over-dramatized version of what actually happened, you guys will now know better. Unless I will watch it if they cast Chris Evans. That's the only reason I would watch it.
Oh my God, why? There's so many. No. Chris Evans, are you kidding me? Well, that concludes our episode 3. Thank you so much for listening, and I hope you guys have a wonderful weekend. Yeah. Peace out.